Dale. Ira Epstein of Linn Associates with your agriculture update, and this is your weekend edition for Friday, July 19th, 2019. Well, the day was interesting because the market, as you can see in the grains, were up. And we don't think it's so much the weather. The market is anticipating that China has made a large grain purchase. I have not seen proof of it. We've talked to our commercials. They sniff it in the air as well, but haven't seen it. It'll show up in exports if they did something. But the beans up 20 cents today, wheat up 9, and the corn up 6 cents. The dollar higher today. There's war talk again in the news as Iran has captured one, if not two ships in the Strait of Hormuz today, and they admit to one. We claim, and I'm talking the United States, and by the way, those ships will involve the UK because one is owned by a UK company flying a UK flag, the other is managed by a UK company. It's a Liberian ship. The dollar got a bid in part off of that. We saw in the Fed, they're talking again about interest rates, what's going to happen at the end of the month, but we're talking about grains here. So in the grains, you got a bid here, you got a bid in the energy markets as well. I talk those because obviously you got to think ethanol, but the profit margin since corn has gone up so much is definitively hurting the ethanol producer. You're going to see some cutbacks most likely there. In looking at a monthly area chart of closes, this market has not been, since 2018, able to get over a monthly chart of closes. It could. 912 and a quarter is that number. This again is the monthly chart. You're up 1 3/4, another 10 cents, and you could do that. And that might get some traders really talking about the upside in the market. You've had resistance right here. Do you see that? At this number, little lower right here, but you're in a zone of resistance on this rally. If you break out of this, let me tell you what traders will say. Get ready. Inverted head and shoulder. A head, a shoulder, another shoulder. And if you can break out over that, that will be the word. And then one of the things that traders like to do on charts is they'd love to be able to pick up this head and just flip it over. And it gives you an idea where you might go in that market. $10 range, if it's a legit signal, could be where the market eventually goes. Obviously, what you'd like not to do is see last week's low taken out, the bottom of that shoulder so far around 870. I'm not saying it's there yet, I'm saying it's a possibility. That's why we have in our futures kit, if you go on our website, all the different formations, you probably want to study that. In the swing line study, this is a study I wrote, the market is showing a pattern of higher lows and certainly higher highs. We don't know where this high will end up yet. The last high was 921.5. If you were to get there, it's possible the market all of a sudden says, gee whiz, I'm over the monthly 18-week average of 18-month moving average of closes. And on the weekly charts, I'm getting a breakout. So we have some numbers to pay attention to, and that's still 20 cents away, so don't get me wrong. The 100-week average comes in with resistance at 926.25. Support is being seen at 872.5. We have a pretty good definition here of what the market's been going up to, a zone on the top and coming back on the bottom, the support. If the market were to get back under 870 and not get through these highs, you could argue you've made a double top, take that out, and put back into play a big size break in the market. Right now, who's in control on this? The bulls. What they don't want to see is that 870 level, and that's last week's low. Let's see what it was 870 on the head. What about momentum? It's still pointing up. You can see how it's going. And on the slow stochastic study on the weekly charts, I don't look for overbought or oversold. I look to see is the momentum pointing up, down, or sideways. This is still pointing up. So I have the bias up because the market's over the 18-week average, and that's how I define bias, above or below it. I have the swing line up. I have two levels of resistance, the 926.25, the 938.25, and the number I would not want to see taken out if I were in the bull camp is the 870 level. In the meal market, you fell back, and for 3 weeks you're fighting a battle at the 18-week average of closes. As defined by the swing line, you have a pattern of lower highs and lower lows. That is bearish. The bias is up because you're over the 18-week average. That counters the bearishness of the swing line, and momentum is flat. I think you'd agree on that. Sort of nowhere right now. In soybean oil, look at how many weeks in a row you keep hitting this 18-week average. In this market, we settled at 28.10. Therefore, the momentum is up, the bias, because you closed over that number. The trend has been with higher lows, higher highs, and you still have the momentum as measured by the slow stochastic to the upside. In the corn market, you had a big reversal week. So even though you came back 6 cents this week, today rather, the market's still a big reversal week, went from 460 to 423. That's what I call a sizable pullback. Market is telling us this 460, 464 level is expensive for it. Momentum has just stayed upward and flattened itself out. You still have the pattern of higher lows, but now you've got, until you take out this week's high, a lower high. Take that out and you put into play the upper Bollinger Band. I think right now you've got a market that's looking for momentum, and that's going to be what it tries to find. The same goes with the wheat market. You've got momentum in terms of the swing line. Let's call it the trend, actually, is the right word for both of those, I was saying. Lower highs, lower low. That's down. You're over the 18-week average, so the bias is up. The two fight each other. Obviously, if you fall down, I'm looking to see where could support be, and I keep getting this 483, the 18-week average, and 480.5, the 100-week average. So that's where I think support is in the market. And in this case, I see momentum having turned down. So if momentum leads price, you could see more weakness in this market. The cocoa market had fought, past tense, a battle, getting up over and over to the 18-week average. And it's been having a tendency, when it does that, to go back to the 18-day average of closes to regroup. Well, this week's really no different. It did the same darn thing again. And that's what it's doing. You're not trending. You're more or less sideways with a slight upward bent, momentum pointing down. Bias in this market is up because you're over the 18-week average, but the swing line is not trending. You got a higher high, lower low. Sugar market, the daily charts look a heck of a lot worse than the weekly chart. On the weekly chart, you're again approaching this Bollinger Band out of a sideways action that each time we've dropped to it, within a short period of time, it's spun back up on you towards that 18-week average. I would expect to see the pros covering at 1146. I agree, momentum is pointing down. I agree, bias is down, but you have that higher high, lower low pattern, and I still think that first challenge of the Bollinger Band might find some support. In the coffee market, you got up to that Bollinger top, fell back, as you can see, to that 18-week average, rallied again up to it. And if you look at where you're at, those that got out on that first challenge are no worse off than they've been in a bit here. The bigger resistance came in at the 100-week average in the Bollinger Band, and you've been slipping. Momentum is pointing down, so you got to be a bit cautious there, but the trend is up and the bias up. You have hit upside targets. In the cotton market, this is still a very bearish-looking weekly chart. You've had a constant pattern of lower highs, lower lows. Now, if I come over to the low right here, that number was 60.27, and while you don't see it, this number is actually lower. That's why I always check the numbers, because sometimes they look like that's a higher low than that. It isn't. Momentum locked in, still bearish. So I've got downside bias, a trend down. Market hits the Bollinger Band, goes sideways, and seems to fall towards it again. The cattle on feed report did come out today after the market closed, totally neutral. Every number right on the number of what the estimates were. So we'll see what that does to the market. You're still in downside momentum. You still have the trend down in the market with lower highs, lower lows, and the bias is down. Should the market come alive, you have two levels of resistance, 115.20 and 116.07. In the hog market, this market is getting a boost. You know, when you hear the words Russia buying grain or something, you always think hogs, and you think they don't hear that? That when they hear it at one side, they're hoping for the other. This market did go through this 83.30. So prior to this, we had been lower highs, lower lows. Targets were 67.05, 66.75. You got to 69.87, and it didn't go for the rest of it. pulled back. I wouldn't be surprised if you hang around this 18-week average, but you're out of your downtrend. You now have a higher high, lower low, and momentum has done a sudden shift. Look at how that was pointing down. It's now completely shifted, so the bias is up also. Put it together, you have game plans. And one of the things I do is in the morning, I have my morning subscriber video. And I'll explain how this actually works. I get up early. Early. I've already read what's going on in Asia. I've already checked what's going on, be it Bloomberg, Fox, CNBC. I've read everything I can get my hands on. And about 6 in the morning, I start recording a video. The video covers all the major sectors of the futures market, be it stock indices, the interest rate sector, the currencies, metal markets, the meat markets, the grain markets, the soft markets, and the energies at the end. And I do it in a way that you can pull on the bottom of the video and see just the section it's in. I charge for that video unlike these because I'm actually saying buy here, sell there. The purpose of the video is to give you trade ideas, not trade recommendations as much as trade ideas. Because it's a paid for video, I'm able to say buy here, sell there, do this. That becomes the interesting part for me. The cost, very inexpensive. To give it a try, come on, $7.95 for 30 days. If you like it, it goes month to month after that. If you wanted $15, if you want to take a 1-year subscription, it's $156. And if you want to quit, it's fine. Just let us know. We stop it like that. But I think you'll find that the value is not only there for the video, you get our handheld mobile device. That's a $40 a month value. Now you can watch the videos as they come in. You get a push notification. It tells you the videos are posted, whatever you need from there. You got your quotes, you got your charts, and you got news coming through. I think you'll be quite excited. We know the value is a good one. How do you get it? Give us a call. Go to our website, and I'm Ira Epstein. I don't know if I'm going to be here Monday. The plane, they've already written me, would I be willing to give up my seat? So I don't know what's going on there. If I get bumped, I'm going out west. I don't know if I'll go. We'll see what happens. But otherwise, I'll be back a week from Monday, July 29th. You have a great one. I need a vacation. Take care.